The COVID-19 pandemic and the rising interest rates have had a significant impact on the Australian property market, affecting both prices and demand across the country. In this section, we will explore how these factors have influenced the housing market in different capital cities and what the outlook is for the future. The COVID-19 pandemic disrupted the expected upswing in house prices that was forecasted for instead. Most capital cities saw price declines in the June quarter of 2020, as lockdowns and uncertainty reduced buyer activity. However, government policy responses, such as JobKeeper, homebuilder and mortgage deferrals, helped to support the market and ease the pressure on households. Combined with the record low interest rates that were introduced by the Reserve Bank of Australia, RBA, in response to the pandemic, these measures boosted consumer confidence and stimulated demand for housing. As a result, house prices rebounded strongly in the second half of 2020 and continued to surge in 2021 and early 2022, reaching record highs in most capital cities. According to CoreLogic, national home values rose by 24.6% between March 2020 and February 2022, with some cities experiencing annual growth rates above 30%. The strong price growth was driven by several factors, such as low supply, high savings, increased preference for larger homes, and lifestyle changes due to remote work. However, the housing market conditions started to change in mid-2022, as interest rates began to rise and affordability constraints kicked in. The RBA started to increase the cash rate in May 2022, following the improvement in the economic outlook and the inflationary pressures. The cash rate hikes were passed on by lenders to mortgage borrowers, increasing the cost of servicing debt and dampening demand for housing. Moreover, the lower population growth due to border closures and the reduced migration inflows also weighed on the housing demand, especially for units. These factors led to a slowdown in price growth and a decline in some capital cities in the second half of. According to CoreLogic, national home values dropped by 2% between May and July 2022, with Sydney recording the largest fall of 2.2%. Other cities that saw price declines were Brisbane, Canberra, Perth, and Darwin. Melbourne and Hobart were relatively stable, while Adelaide was the only city that recorded a slight increase of 0.4%. The outlook for the housing market in 2023 and beyond is uncertain and depends on several factors, such as the pace of interest rate rises, the recovery of population growth, the supply response, and the ongoing impact of COVID. Some analysts expect that price growth will moderate further or even turn negative in some markets, as interest rates continue to rise and affordability worsens. Others are more optimistic and predict that price growth will remain positive but at a slower pace than before, supported by strong income growth, low unemployment, and pent-up demand. In conclusion, the Australian property market has been affected by the COVID-19 pandemic and the rising interest rates in different ways across different capital cities. The market experienced a sharp downturn followed by a strong rebound and then a slowdown and a decline in some areas. The future of the market is uncertain and will depend on how various factors evolve over time. The Australian housing market is not a single entity, but a collection of diverse and dynamic markets across different capital cities. In this section, we will explore how the housing supply and demand dynamics vary across different capital cities, with some areas experiencing low inventory levels, strong population growth, and high affordability, while others face oversupply, low migration, and affordability challenges. Let's start with Sydney, the largest and most expensive city in Australia. Sydney's housing market has been cooling down since the onset of the COVID-19 pandemic, with house prices falling by 11.5% and unit prices falling by 8.3% over the year to November. This is mainly due to the impact of lockdowns, border closures, and higher interest rates on buyer sentiment and activity. However, the rate of decline has been slowing down in recent months, as the city reopened and demand picked up again. Sydney is still facing a shortage of housing supply, especially in the outer suburbs and regional areas, where demand is strong from first-home buyers and lifestyle seekers. Moving on to Melbourne, the second largest and second most expensive city in Australia. Melbourne's housing market has also been affected by the pandemic, with house prices dropping by 8.3% and unit prices dropping by 3.8% over the year to November. Melbourne has suffered from a significant loss of population due to interstate and overseas migration, which has reduced the demand for housing, especially in the inner city areas where unit supply is high. However, Melbourne's housing market is showing signs of stabilization as the city emerged from its long lockdown and buyer confidence improved. Melbourne's housing market is expected to recover gradually as population growth resumes and economic activity picks up. Next, let's look at Brisbane, the third largest and third most affordable city in Australia. Brisbane's housing market has been booming in the past year, with house prices surging by 27.8% and unit prices rising by 15.2% over the year to November. Brisbane has benefited from a strong influx of interstate migrants, especially from Sydney and Melbourne, who are attracted by its lower prices, warmer climate, and lifestyle opportunities. Brisbane has also seen a robust demand from investors, who are seeking higher yields and capital growth prospects in the city. Brisbane's housing supply has been relatively balanced, with new construction keeping pace with demand growth. Moving south to Adelaide, the fourth largest and second most affordable city in Australia. Adelaide's housing market has also been performing well in the past year, with house prices increasing by 23.9% and unit prices increasing by 15.2% over the year to November. Adelaide has seen a steady demand from local buyers, who are taking advantage of low interest rates and government incentives to enter the market or upgrade their properties. Adelaide has also seen a growing interest from interstate and overseas buyers, who are looking for affordable and quality housing options in the city. Adelaide's housing supply has been relatively tight, with low levels of new construction and listings. Heading west to Perth, the fifth largest and most affordable city in Australia. Perth's housing market has been recovering from a long period of decline that started after the end of the mining boom, and house prices have risen by 15.7% and unit prices have risen by 9.6% over the year to November. Perth has seen a rebound in demand from local buyers, who are taking advantage of low prices, improved economic conditions, and increased mining activity. Perth has also seen a rise in demand from interstate and overseas buyers, who are seeking undervalued and high-potential properties in the city. Perth's housing supply has been easing, with new construction increasing and listings declining. Moving east to Hobart, the sixth largest and fourth most affordable city in Australia. Hobart's housing market has been one of the strongest performers in the past year, with house prices soaring by 29.8% and unit prices soaring by 21.2% over the year to November. Hobart has seen a surge in demand from local buyers, who are competing for limited properties in the market. Hobart has also seen a huge influx of interstate and overseas buyers, who are drawn by its scenic beauty, cultural diversity, and lifestyle appeal. Hobart's housing supply has been extremely low, with new construction lagging behind demand growth and listings reaching record lows. Next up is Darwin, the seventh largest and fifth most affordable city in Australia. Darwin's housing market has been improving after a prolonged downturn that lasted until house prices have increased by 13% and unit prices have increased by 6.5% over the year to November. Darwin has seen a solid demand from local buyers, who are enjoying low interest rates, high incomes, and government support schemes. Darwin has also seen a modest increase in demand from interstate and overseas buyers, who are looking for affordable properties with high rental returns in the city. Darwin's housing supply has been relatively high, with new construction exceeding demand growth and listings remaining elevated. Finally, let's check out Canberra, the eighth largest and least affordable city in Australia. Canberra's housing market has been outstanding in the past year, with house prices jumping by 28.8% and unit prices jumping by 18% over the year to November. Canberra has seen a strong demand from local buyers, who are driven by high incomes, low unemployment, and stable public sector employment. Canberra has also seen a growing demand from interstate buyers, who are seeking more space, better amenities, and lower taxes in the city. Canberra's housing supply has been very tight, with new construction falling short of demand growth and listings dropping to record lows. The Australian housing market has been through a roller coaster ride since the start of the pandemic. After a brief dip in 2020, property prices surged by 25% in less than 2 years, reaching record highs across the country. But what will happen next? How will the housing market change in 2022 and beyond? There are many factors that will influence the future direction of the housing market, some of which are hard to predict. Let's look at some of the key drivers and challenges that will shape the property landscape in the coming years. One of the main drivers of the housing boom has been the historically low interest rates, which have made borrowing cheaper and easier for home buyers and investors. The Reserve Bank of Australia has kept the cash rate at 0.1% since November 2020 and has signaled that it will not increase it until 2024 at the earliest. However, some economists and analysts have warned that interest rates may rise sooner than expected due to rising inflation and global pressures. Higher interest rates could dampen the demand for housing and make it harder for some borrowers to service their debts. Another factor that has boosted the housing market is the strong economic recovery from the pandemic-induced recession. Australia's economy grew by 3.3% in 2021, outperforming most other advanced economies. The unemployment rate fell to 4.2% in February 2022, the lowest level since the government stimulus measures, such as JobKeeper and HomeBuilder, also supported household incomes and spending during the crisis. However, some of these stimulus programs have ended or tapered off, and there are still uncertainties about how the economy will cope with new variants of COVID-19 and potential lockdowns. A third factor that has influenced the housing market is the shift in preferences and lifestyles due to the pandemic. Many people have opted for more spacious and affordable properties in regional areas or outer suburbs, as they work from home or seek a better quality of life. This has created new million-dollar markets in areas like the Sunshine Coast, Gold Coast, and Illawarra. At the same time, some inner-city areas have seen lower demand and prices for apartments, especially those that rely on international students and migrants. This brings us to another factor that will affect the housing market: immigration. Australia's population growth has slowed down significantly due to the closure of international borders since March. This has reduced the demand for housing, especially in major cities like Sydney and Melbourne, where migrants usually settle. The government has announced plans to gradually reopen the borders from November 2021, starting with fully vaccinated travelers from selected countries. This could boost the population growth and housing demand in 2022 and beyond, but it will also depend on how fast and how safely Australia can welcome back overseas arrivals. Another factor that will influence the housing market is consumer confidence. Consumer confidence is a measure of how optimistic or pessimistic people are about their current and future economic situation. It affects their willingness to spend money on big-ticket items like houses. Consumer confidence has been volatile during the pandemic, fluctuating with changes in health conditions and restrictions. According to ANZ Morgan's Consumer Confidence Index, confidence rose to a 10-year high in February 2022, but fell sharply in March 2022 due to new outbreaks of COVID-19 in some states. Consumer confidence will likely remain sensitive to any changes in the pandemic situation and its impact on the economy. Finally, another factor that will shape the housing market is government intervention. The government has a role to play in regulating and supporting the housing sector through policies such as taxation, planning, infrastructure, and social housing. The government can also intervene to address any issues or risks that may arise in the housing market, such as affordability, accessibility, stability, and sustainability. For example, in March 2022, the Australian Prudential Regulation Authority, APRA, announced that it would tighten lending standards for banks to curb risky lending practices and prevent a buildup of household debt. The government may also introduce other measures to cool down or stimulate the housing market depending on its objectives and priorities. As you can see, there are many factors that will affect the future outlook of the housing market in Australia. Some of these factors are positive and supportive of further growth, while others are negative and challenging for the sector. The balance between these factors will determine how fast or slow, how high or low, how stable or volatile the housing market will be in 2022 and beyond.